Welcome back to Fantasy Stockball with New Level Investment Management LLC 2016. And first of all, let me just get started by saying New Level returned 5.64% in 2015. And just to put that in perspective, both the Dow and the S&P both lost money in 2015. New Level actually returned, again, 5.64%. So that just goes to show you that with a well-concentrated portfolio, you can really find some really good investment gems that can beat your diversification or your passive indexing and just leaving your money in the markets. As long as you're out there doing your homework, annual reports, diving into the numbers, and really taking a company as an investment instead of just saying I'm buying some stock for today, you can really beat the markets. And again, we're living proof with a small concentrated portfolio that can be done. So I just want to thank our clients out there for sticking with us in a volatile market like 2015 was. 16 is kind of shaping up to be in that same arena. So it's really a stock pickers market going again for 2016. So we're looking to have even better returns in 2016. With that being said, let's go ahead and get into our Wildcard Stockball playoff edition. We're going to give you a game from Saturday and a game from Sunday, and we're going to give you our Saturday game with the Pittsburgh Steelers going up against the Cincinnati Bengals. And I'm not from Missouri, but the Bengals are going to have to show me something, right? I mean, they've been bounced out the first round in the last several years under this Andy Dalton era. They can't get out the first round. I think the Steelers are going to get it, even though the Steelers are kind of up and down when it comes to divisional games as well. They lost to Baltimore a couple weeks ago. They pretty much should have ended their season. But I'm going to ride it out with the Steelers, and I'm going to match them up with Discover Financial Services, a.k.a. Discover Card, right? So you have American Express, Visa, MasterCard, and Discover is like that hidden gem, if you will. From a valuation standpoint, they're really cheap. Price-earning ratio is under 11. But the key is they pay a 2.09 dividend yield, and that's actually comparable to the 10-year Treasury bond, which is trading around 2.1. So you're going to get a good dividend yield. Plus, I really think this company has legs to run. It's actually one of our best picks for 2016. Again, from a valuation standpoint, I think it's really good. They have a really good core customer group, right? So they have customers that usually have pretty good credit, that pay down their debts. And as the oil prices continue to slide, Americans are going to have saving that money at the pump. They're either going to go out and buy consumer products or they're going to pay down their debt. So I think Discover is really going to make headwinds on this dynamic that we're having going on in America right now with the oil and all that good stuff. And again, with the dividend yield, that's going to be key in this global economy that we're having right now, with China devaluing possibly their yuan, and just their slowdown is really hurting our markets, even though our exports are, I think it's like less than 10%. So it really shouldn't hurt our economy, but it's affecting our stock market. So with that being said, let's move on to our Sunday game, and we're going to go with the Seattle Seahawks. They're going up against Teddy Bridgewater and the Minnesota Vikings. And this is a great matchup, right? It's like old versus young. I hate to call Russell Wilson old, but he's a proven commodity. Last two Super Bowls, won one, lost one. He's going up against the young guys. First time in the playoffs, with the division crown actually going into the game. And I just like the Seahawks on the road. I really think they're a juggernaut in the NFC. I wouldn't be surprised if they get back to the bowl again. And I'm going to match the Seahawks up with Walmart, another juggernaut in their respective industry, retail. I know retail's had a horrible year. Walmart actually had a horrible 2015. There's an investment strategy called the dog of the Dows, right? So they take the lowest performing 10 stocks in the Dow from the prior year, and they invest in them for the current year. Usually because when the stock price drops, the dividend yield goes up, right? There's a correlation between the dividend yield and the stock price. So when the stock price goes up, the dividend yield goes down. So people are chasing dividend yields, and especially in this type of market, that's not a bad strategy. Actually, Walmart has a dividend yield a little bit over 3%, which is really, really juicy right now. Plus, this company's still bringing in close to $300 billion in revenue. And with Walmart, they get a bad rap, right? I mean, they got to battle Amazon on the e-commerce side. We all know Amazon is a juggernaut when it comes to e-commerce. And then they got to battle other stores like Dollar Tree and Dollar General and Target. I mean, so you got companies eating your lunch on both sides of the fence, and they get a bad rap with the wages and the increases in the wages and all that good stuff. But I still think Walmart is a bellwether company. Kind of set your watch to it. The price earning ratio is a little bit under 14, close to 13. So I still think it's a cheap company from that perspective. And again, that dividend yield in these markets, you're gonna love it. Walmart, Discover, you can't go wrong with those guys. Again, new level return 5.64%. I can't stress that enough. In a down market last year, that's awesome. 2016, we're looking for even better returns. Stick with us. New Level Investment Management LLC.